Okay, hi all. Today I'm going to go through the 2012 higher level revaluation of fixed assets account. This is a 60 mark question only. Um, it's all about revaluing land and buildings. What you're required to do is to prepare certain ledger accounts. They don't tell you which ledger accounts, but it's a given that they're the same ledger accounts that they require every year. Um, and that's the bulk of it. And then occasionally they ask you to show an extract from the balance sheet. So I'm just going to start in this video anyway to prepare the first of the ledger accounts, which is important, and that's the land and buildings account. So these ledger accounts are T accounts, and I would, just to save time, I'm inclined to do them kind of roughly enough without using a ruler. You might say that's the way I always do them, but in this case, very definitely, I think this is enough. So this is the debit side and this is the credit side. You don't need to put in these markings, debit and credit. I'm just doing it for the sake of this example. The debit side is the left-hand side, the credit side is the right-hand side. And it bears remembering our rule for assets and expenses going on the debit side and liabilities and gains going on the credit side. And what that means is assets and expenses on the debit side means if you have an asset account, which this is, anytime you want to increase it, you put it on the debit side. So it means when you buy new land and buildings, land or buildings, you put them in the debit side. If you sell or dispose of any land or buildings, which reduces the amount in your land and buildings account, you put it on the credit side. So the rule, assets and expenses on the debit side, to be more specific, it's really assets and expenses when they're increasing, you put the information on the debit side. So what it says here, going through it, is prepare the relevant ledger accounts in respect of the above transactions for each of the years, December 2007 to December 2011. So there'll be a number of years and we kind of put them each one after another, almost stuck together. So let's have a look. First of all, I suppose the land and buildings account, it's related to that figure that you have in the cost part of the balance sheet when you talk about fixed assets, when you have cost, depreciation, net book value. So there's absolutely no depreciation in this account. It's irrelevant. If you sell a land or a building, the amount of money you get for it is irrelevant also. You can ignore that. All we're interested in is when you buy new land or buildings, put it on this side. If you sell land or buildings, put it on this side. If you revalue buildings upwards, if you increase the value of it, put it on this side as well. So land buildings are going up this side, land buildings are going down this side. Okay, so here's the thing. At the very beginning, we have to have a balance to start our books with from the previous years prior to the 2007 account that you're going to start. And so we put our balance always on this side as well. Well, it must be for this account, it must be on this side. So first of the first, 07, balance brought down, and it's going to be some amount. The amount is just the cost of your land and buildings at the start of the year. So it says on 1st of January 2007, Logan Limited owned freehold buildings which cost 360 and land which cost 240. So altogether the land and buildings is 240 plus 360, which is 600,000. So we put that in here. That's our land and buildings to start with at the start of 2007. Now we look at what happened during 2007 that might change that figure. So it says on the 1st of January 2007, we revalued land and buildings at 700,000. It means that we increased the value of our land and buildings, and as I said, when the amount is going up, we put it on this side. So we increased it to 700,000. That means we increased it by 100,000 to reach a total of 700,000. So it happened on the same date, so we don't have to put in the date again. And because it happened because of a revaluation reserve, we must put in Reval Reserve or something similar. And so that's it. That's all that happened in that year. So what we always do when we're totaling these type of accounts is we add up the biggest side first, which is obviously this side because there's nothing else on that side, and we total that. So 6 and 1, 700,000. and then we put a balance on this side which will give it the same total. So if we wanted to have the same total, 700,000, and there's nothing in there already, then the balance at the end of the year, 31st of the 12th, 07, balance carried down, must be 700,000 to give it the same total. So this side adds up to 700, that side adds up to 7. And just like, I suppose, similar to your your closing stock at the end of one month being your opening stock at the start of the next month, your balance carried down at the end of this year has to be the same as your balance brought down at the start of the next year. So if your total in your land and buildings account was 700,000 at the end of 2007, that has to be your total at the very first day of 2008, 1st of the 1st, 08, balance brought down 700,000. And then all we have to do is figure out what happened in 2008. So 2008 sold for 320,000 adjacent land which cost 240 but was since revalued on the 1st of the 1st 2007. So as I said, ignore the amount that you get when you dispose of an asset. That doesn't have any effect on these accounts. But all we're interested in is it's the land which cost 240 but was revalued that we're getting rid of. So we want to take that land back out of our account here again, but we want to take the right figure for it out of our account. We want to take whatever amount is in our account at the moment for that land. That's the amount we want to take out. So at the moment our land and buildings are 700,000. And it says of this revalued amount, 270 was for the land. So it's that 270 that we want to take out of our accounts because we no longer have that land if we sold it. So again, we're lowering our land and buildings amount by 270, so it goes on to this side. And it happened on the 1st of the 1st, 08, and we call that a disposal. We're disposing of that land. Okay. And so again, that's all that happened during that year. So what we want to do is total it, and again we look at which side is bigger. This side is the bigger, so that's the total we go with. So we go add up that side, comes to 700,000. This has to have the same total. And in order to have that total, we have to put something in here on the 31st of the 12th, 08, balance carried down. And all we need to know is what do I put in here to make this and that add up to 700,000. And it's 430,000, isn't it? Yeah. So again, start our new year, 1st of the 1st, 09, and our balance brought down is whatever our balance carried down here was, 430,000. And then let's see what happened in 2009. So 2009, purchased buildings for 500,000. So immediately our buildings are going up 500,000, and that's bank, because our bank is going to go down as our buildings go up in the double entry sense. During the year 2009, 100,000 was paid to a building contractor for an extension. So if you like, we purchased another bit of a building, and again our bank is going to go down as our buildings goes up by 100,000. Okay, what else happened during the year? 2009 was paid to building contractor. Okay, the company's own employees also worked on the extension and they were paid wages amounting to 50,000. So that's part of the cost of our extension. So again, the cost of our buildings is going up by another 50,000. That's our wages goes up and our buildings goes up. And that's all that happened. And again, we can see if I'm adding up both sides, this side is going to be bigger than this side. So we total this side. And we're talking about, let's see now, what's that, 930, 1,080,000, isn't it? Okay, so this has to have the same total, 1,080,000. And again, this is going to be at the end of the year. We get our balance, 31st of the 12th, 09, balance carried down, and what do I have to put in here to give that total? Well, it has to be the same figure, doesn't it? Okay, and then on our next year, 1st of the 1st 10, balance brought down And it's going to be the same as this, isn't it? 1,080,000. Okay, so what happened in 2010? And it's going to be revalued buildings owned at this. So that's the new value we gave them. But again, just like at the very beginning, we don't put that figure in. It means that our buildings go up to that amount. So we put in whatever the amount we need to raise this up to that. So it's the difference between 1,188,000 and 1,080,000. So that's 108. We'll make that 1,188,000. And again, that's Reval Reserve and really revaluation. I'd say, because those are important words, and there are marks going in the exam for these, so I shouldn't shortcut them too much. Revaluation Reserve. And then that's all that happened that year, really. So again, this is the bigger side. So that's the one we're going to add up. 1,188. And so this has to have the same total. 1,188. And since there's nothing in here already, 31st of the 12th, 10. Balance carried down. And what do we need to put in to give it this total? The exact same figure. 000. Okay. So that's the figure we bring down here then. First of the first 11, it's going to be balance brought down, same as this, 1,188,000. Okay, and what happened in 2011? So this is probably the hardest part of this question, even though it's not that difficult. Sold for 400,000. Again, we ignore the amount of money we got for something. The buildings owned on the 1st of the 1st, 2007. So the important bit there is we got rid of the buildings that we owned at the very beginning, 1st of the 1st, 2007. So here's the thing. At the very beginning, the buildings in our book, on our books, this is the value that we had, the cost value, if you like, that we had in our land and buildings account. But we changed it twice between then and disposing of it. We revalued them in 2007, we revalued again in 2010. So when we're trying to take them back out of our books by putting it on the side here and calling it a disposal, 1st of the 1st 11 disposal, it's not going to be that 360 from the start of the year. It's going to be whatever they've risen to, whatever the cost has been raised to after the two revaluations. So we have a little bit of work to do. We can see at the start of the year anyway, it was 360,000. That's start of the year. The owned freehold buildings cost 360. When it started the year, it started 2007, I should say. Okay, but then at the beginning of 2007, we revalued that, and we revalued the land and buildings up to 700, and of this, 270 was land. So if I take the 270 from the 700, I'm left with 430. It means the buildings went up to 430, from 360 up to 430. So if we do that here, buildings going up to 430,000. Okay, that's an increase of 70,000. We don't really need that at the moment, but we will need it later on. So I'm just drawing it out like this now. Okay, then what happened? We had another revaluation in 2010. It means all of our buildings went up to this, but now it's complicated because we have several different buildings. We have this building, we have the extension, and we have the buildings we had at the start. But they make it easier on us because they say this works out to be a 10% increase for each of the buildings. So what we can just say is, at the time before that increase, these buildings that we had at the start were valued at 430. If there was a 10% increase, well, 10% of 430 is 43,000. We know during that second revaluation, these buildings went up to 473,000. Okay, so that's the amount that we want to take out of our books when this disposal happens. 473,000. Now, that's not the only thing that happened that year. We had sold for that, the buildings owned in that. Ignoring the 400, not important. The remaining buildings were revalued, so we had another revaluation. So we always do this first, because then that isn't affected by the revaluation, and then we do the revaluation. So in order to do the revaluation, look at what's happened prior to the revaluation. Our balance, our total on all our buildings was 1188,000 at the start. Then we got rid of one that was 473. Got rid of it. So what were we left with? We were left with our buildings having a cost of 715,000. But this says the remaining buildings are then going to be revalued up to 950. So we need to bring that 715 up to 950. Well, how much am I going to have to add on to that to make it go up to 950? All we have to do is subtract 715 from 950. 135, isn't it? 235, excuse me. 235. And so that's the amount that we put in here that we need to increase again. We decreased by 473, and now we're going to increase again by 235. And we'll call that Revaluation Reserve. That happened, it all happened on the 1st of the 1st, so that's fine. Now we need to just balance our account. And again, this is definitely going to be the bigger side than this, okay? So before I total it though, what's my balance carried down on this side going to be? What's my new balance in this account going to be? Well, we know already, don't we? The buildings were revalued up to 950. So this had better be 950. I mean, we'll double check it in a second, but my balance carried down had better be 950. 31st of the 12th, 2011. Balance carried down 950. So let's just add it up and see if we were right. 0, 0, 0. What's that? 2, 4. Oh, my maths might be out, but we'll see. So 1, 4, 2, 3 there. So 0, 0, 0, 3. That's definitely a 2. 14, isn't it? So 1, 4, 3 there. So that's perfect. And then the last step, even though we don't need the next year's accounts because we only need to go up to 2011, but we'll always do this anyway. 1st of the 1st, 12. Balance brought down 950. That's where you leave that buildings account.